Now, breakaway gap catches the start of a move. Happens on high volume, and they really get filled. They normally spark a new trend, and they run a while before they retrace. The breakaway gap strategy is simply this. Bars have been in a congestion zone or like a tight range. It'll break away. There'll be a bit of volume on the break. Often it'll be double what it normally is. It'll be clearly above that 25 period average line on the volume. It's going to continue the move of the breakaway bar, and we'd just jump in at the open of the breakaway. That's generally what we'd do. So you'll see a lot of US traders do that at 2:30 in the afternoon. One of the major US stocks, Google or something, will gap in a direction. As it opens, they'll literally buy it and run it for that move. Or they'll do different strategies where they'll wait for the gap to then close and start to fill, and then they'll short it or long it in the opposite direction. We're going to investigate those as we now move on. We're going to stop. We're going to place a stop to the swing lows or tightly if the trend is accelerating. That's basically our stop strategy. And we can use it in any market, any end of day or intraday trading market. Simple breakaway gap. There's your consolidation building on the left there. And as we focus on that consolidation, here's our congestion or consolidation zone. Then the next day just gaps up. We would literally buy on the open. And there's our gap. Our stop would be at the low. And literally we would be running that and trailing it up as the stock moves up. So it's a case of here's the gap between the last day, which would be here, gaps up, and we're literally entering the trade on the open. We simply wouldn't place the stop, obviously, until that bar is closed, because obviously we could buy it here and then it could immediately start to fill. So we would not place the stop until the bar is closed, and then we would literally run it and hold it while that stock is moving. Okay, let's have a look at some gap away examples. Here's a classic on NVDA. You can see here right in the middle. This is a 5-minute chart. You can see this line in the middle here is the break from one day to the next. So it's literally the stock opens the next day and it gaps up. Very, very simple but very commonly used trading strategy in the US would be, as that stock then opens up, buy on the gap up and literally hold for the run. You can certainly see by doing that, if you entered here at the gap, let's have a look at the price level here, it would be 43.25. Very quickly the stock runs to nearly 100 points. And that's essentially the goal of the US trader. $1 a day it's called, looking to make 100 points in a morning session. For them, 9:30 is the start point in the morning. So you can see here's where things are opening up at 2 o'clock in the afternoon for us in the UK. This is obviously in UK time, but that's essentially what they're trying to do. Literally just when the stock gaps up, opens on the day, they're buying on the open, looking to run to take 100 points, closing the position out. And that's pretty much all they're looking to do. Hopefully play golf within an hour from that time. There we are. If the stock doesn't work out, obviously they've got stops in place, and we'll look at how we manage stops on those kind of trades as we move through the more of the examples. Again, here's another breakaway gap. This is to the downside. Small gap, isn't it? Away from the closing price of the previous day. Big chunk of volume, and the stock just literally opens and starts to run immediately. So look at some practicals here. Let's look for the first breakaway gap. If you guys can do that, those remotely who are looking at your practicals, please do download the practicals and have a look at HAL here. We're looking for a breakaway gap which initiates a move on some volume. So we're looking for a chunk of volume and an initiation of a move. In other words, where a stock may have been trailing sideways and then gets going. Got it, Chris?
About 20th of July?
Yeah, there we are. 20th of July. Let's zoom on in. Yeah, it's been consolidating sideways. Big chunk of volume. Gaps up. And off it goes. What about this one? Auto sector. Can't see the volume on this chart, so we just have to literally go for the look for the initiation of the move, which you can see is here.